Oftentimes when we're negotiating venture capital financings for our clients are befuddled when they learn that the VC has offered a different type of preferred stock, and they ask us, what are the differences between a non-participating preferred stock versus a participating preferred stock versus a capped participating preferred stock? It is a common question, and the differences are pretty simple. Participating preferred stock is a lot like a debt instrument in some ways. The venture capital investor with participating preferred gets all of their investment back before anybody else gets paid anything. So for example, if a VC investor invested $1 million and had a participating preferred and the company were sold, after the debt holders are paid off, of course, the equity holders would receive proceeds, and the preferred stockholders with a participating preferred would get the first $1 million. Once they had that $1 million, their shares would be as though they were then converted to common stock, and they would share with the founders and the other common stockholders in all of the proceeds that are left after their first $1 million is paid. A non-participating preferred stockholder has something very different. They also have the right to be paid first, but they only have that right to get their $1 million back and no more. So in that situation, if the company were to be sold for, say, $10 million, they would get the first $1 million, or they could convert their preferred stock to common stock and participate side by side with the founders in all the money that's distributed. Thus, if their preferred stock represented 25% of the company's equity, for example, and the company were sold for $10 million, they could convert their preferred to common and get $2.5 million of the 10, or 25% of the proceeds. That would be better than just getting the first $1 million back, so they would go ahead and convert and get the 2.5. That is a non-participating preferred. So in other words, they get the first money out, but they get no participation beyond their money back. In between these extremes of fully participating preferred and non-participating preferred is the example of a capped participating preferred. With a capped participating preferred, the investor gets their money back and then they participate. But once they've participated up to a certain level, then they're capped from getting any more than that. So for example, if we had a capped participating preferred that was capped at 2 times the original investment, and we had the example again of a sale of the company for $10 million where the preferred stock represented 25% of the company, in those circumstances, under capped participation, the investors would get $2 million and then no more. Or, same as with the non-participating preferred, they can convert and get 25% of the proceeds. So they would go ahead and convert and get $2.5 million rather than the $2 million. Let's say, however, that their cap was a 3x cap instead of a 2x cap. Well, under those circumstances, they would go ahead and get the $1 million, and then they would participate up to the additional $2 million. And so in that circumstance, they would actually be better off by not converting and receiving potentially close to $3 million in returns as opposed to the $2.5 million they would receive if they converted.